Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a little bit about foreign account reporting and penalties, FBAR, FATCA, and everything related. There's a lot of horrible information out there. There's a lot of self-purported experts who want you to think you're going to go to jail. They use big red letters. They pretend to be board certified, things of that nature. But at the end of the day, most of the time, getting into compliance for not reporting your foreign accounts is not a big deal. There's various opportunities, and we'll get there in a moment, but let's start with the basics. First thing is who has to file. Generally, it's going to be three categories of individuals, and for this presentation, we're just focused on individuals. Entities may have to file as well. You're going to have U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. Some exceptions and exclusions and limitations. Maybe there's an exception to substantial presence. If you make a treaty election, you could take the position like IRS say that you shouldn't have to file certain forms. IRS doesn't have to accept it. They still take the position that forms like 3520, 5471, and the FBAR are required even if you live overseas in a treaty country and make a treaty election. Some of the common forms. Now, the two acronyms you hear the most are FBAR and FATCA. FBAR is Foreign Bank and Financial Account Reporting Form FinCEN 114. FinCEN refers to Financial Crimes Enforcement Network. It's not an IRS form. You also have FATCA, which is the Foreign Account Tax Compliance Act. That is an IRS form, and it's Form 8938. A lot of times you'll have to file the same asset on both forms. Sometimes you may not have to, either because the asset's not reportable on both forms, or you meet the threshold for FBAR, which is just more than $10,000 in annual aggregate total of your accounts, versus Form 8938, where the threshold could range from $50,000 to $600,000, depending on if you are single or joint and whether you live in the U.S. or you live abroad. Another common form these days that taxpayers have to file is the 8621. That's the PFIC form, Passive Foreign Investment Company. You may think, but I don't own a foreign investment company, right? But you may have invested in some foreign mutual funds and some foreign ETFs or CCAs and things of that nature. So you unfortunately get pulled into the 8621 matrix. The 8621 is more burdensome than the other forms, and if you have an excess distribution, it can be exceedingly burdensome, but overall still not too bad unless you have the excess distribution. Some other forms are the 3520 for foreign gift, inheritance, or trust distribution that you received as a U.S. person, or if you own a foreign trust. 3520A is if you own a foreign trust. These forms can range from relatively straightforward, receipt of a foreign gift or inheritance, to very complicated ownership of a foreign trust. Other forms like 5471 and 8865 for foreign partnerships and entities. But what's the thing most people are concerned about? It's the penalties, right? What is the IRS going to do? So let's talk about the different penalties depending on what form we're talking about. So the FBAR is the one you hear the most. For the FBAR, you have civil and you have criminal. Criminal is super rare. So if you're doing one of these free consultations and someone's making you feel like you did something criminal, just move on to the next one, okay? 99% of the time, it's not criminal. So when you're civil violation, you have willful and non-willful. Non-willful after the Bittner Supreme Court case is limited to $10,000 per year or $10,000 per form, one form filed per year. It adjusts for inflation, so it's closer to $15,000 or $16,000 now. Willfulness is much more complicated. The IRS takes the position that it could penalize you 50% maximum value of the unreported account. So even if your foreign accounts are artificially high for the day, for the week, you could get penalized on that. It's much harder to mitigate those penalties, and there's even a floor penalty, which is 50% or 100,000, whatever's higher. So if you had an account with $60,000, a 50% penalty could be $30,000. But the IRS takes the position, well, actually, we can get you for $100,000 because that's the minimum willfulness penalty. Oh, and it adjusts for inflation too, so it's closer to $150,000. The 8938 is the FATCA penalty. Typically, that's going to be $10,000. Doesn't seem to adjust for inflation, but there's a continuing failure to file penalty as well. So what that means is you get the initial $10,000 penalty, you get a notice, and then if you don't fix it in time, it can go up to another $50,000 penalty. So you could be looking down a significant amount of penalties for FBAR and FATCA if they get you for the 3 to 6 year time period. Penalties for 3520 depend on whether it's a gift or a trust. When I mean gift, I say gift or inheritance. It's basically treated the same for 3520. It's 5% penalty per month, up to 25%. So you could be looking at, you get a gift of $1 million or an inheritance, let's say, one-time inheritance of $1 million. You could be looking at a $250,000 penalty. 3520A is more based on the value of the trust distribution, so it gets more complicated, but it can get very expensive. 8621 is a little different. That's the PFIC. There's typically no monetary penalty, but the return does remain open. So if you end up getting audited and you didn't file those forms, the IRS can dive into that return. You'll want to take the position all they could do is hit you for 8621. They'll take the position that they can hit you for anything you didn't do in that year, so you want to be cautious. For taxpayers who are out of compliance and have not yet been contacted by the IRS, there's various ways to get into compliance, and they're safe. If you're willful, you do the Voluntary Disclosure Program, VDP. There used to be an offshoot, OVDP, for offshore. Now it's all done through the VDP program. If you're non-willful, there's a lot of other options available to streamline procedures, delinquency procedures, and reasonable cause. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.